If you're planning to fly this summer and your route's been canceled, or it suddenly costs a lot more than you expected, or your journey involves a very long detour, you're definitely not alone. Since the conflict involving Iran escalated in February, aviation has been hit by what experts are calling a compound system shock, and this is just as peak summer travel season approaches. Today, I'm joined by Sahil Shaikh, one of our multi-asset portfolio managers, to have a closer look at what's happening from jet fuel prices to flight cancellations and to what this means for investors. So, Sahil, the conflict in Iran has triggered one of the biggest jet fuel shocks that the aviation industry has seen. Let's start there.
Yeah, no, completely, Nicole. A shock really is an understatement. When you think about jet fuel prices, in some cases they've more than doubled, and we're talking about prices going from in and around $70 to $80 a barrel to $170, $180 for some carriers. So it's really, really staggering. And it's not uniform, right? So different regions are impacted to varying degrees. So Singapore jet fuel increased from just under $90 a barrel to over 216 at one point. And if you compare that to Brent crude oil, which went from $71 a barrel to 134, you can see certain petroleum products are being impacted, like jet fuel, a lot more than the headline Brent or WTI would show. So, I mean, what does this mean for airlines? Fuel costs now account for 30 to 40% of their total expenses for long-haul flights. So it's a real material margin compression.
Absolutely. But a lot of people, including myself, might assume that airlines are actually protected here, given most of them hedge their fuel costs. But to what extent does hedging really help in a shock like this?
Yeah. I mean, hedging does help, but it's never, it's never 100%. It doesn't just remove the impact of such an acute increase in prices. And it varies by region, it varies by company. So typically European companies hedge higher ratios. For example, Finnair was 80% hedged for their quarter two 2026. Ryanair is hedged in around 80% for their financial year of 2027. On the other hand, major US airlines are less hedged due to, previous experiences. And what I mean by that is hedging is a form of insurance and is expensive. So in normal times, you really do end up spending a lot hedging jet fuel prices. So Southwest Airlines famously discontinued its hedging program in 2025 because the premiums were so high. And from my understanding, Chinese airlines also are in a similar predicament to their US counterparts. So it varies by country. Hedging helps to a degree. The longer this issue persists, the longer, the less useful the hedges will be.
Yeah. And I suppose this is all becoming very real for travelers now, because we're seeing in the headlines about, airlines cutting capacity just as this peak summer travel season approaches. Can you give us a sense of how airlines are responding operationally and the impact of travel this summer?
No, yeah, completely. When you think about majority of Europe's jet fuel, and in particular the UK, they source it from at least Kuwait or somewhere in the Middle East. So it all comes through the Strait of Hormuz. That hasn't opened, right? So the longer this issue persists, the more acute it becomes. So European transport ministers met because the IEA, the International Energy Agency, warned Europe has less than 6 weeks of jet fuel supplies remaining. So it's a very, it's an acute issue. So operationally, you're seeing capacity cuts. Lufthansa, for example, cancelled 20,000 flights between May and October. That's 120 daily flights cancelled, and it saves about 40,000 tons of fuel, because some of those routes just weren't profitable. And that's around 1.5% of daily commercial flights. And on top of this, you're seeing a bit of a lull in tourism to the Middle East. So it's not a great mix for a lot of airlines.
Yeah, absolutely. Having a significant material impact. If we now look though at how markets are reacting to all of this, like how has this aviation shock been reflected in asset prices? Like markets overall have seemed relatively resilient.
No, completely. The market has staged an incredible rally from the lows 4 weeks ago. But under the surface, the price movement seems a bit more rational. You've had the US outperform, Europe due to its energy independence. Airline stocks have been hammered, but they're a very small part of global indices. What's really taken precedent is the US earnings season. Semis and banks have had tremendous earnings. Semis have continued their run because the earnings results are incredibly robust and incredibly profitable. US banks have made absolute killing because of heightened volatility, heightened trading activity, and their capital markets business is doing well. So yes, it can feel the equity markets a bit complacent, but it's on the back of a very strong fundamental backdrop. So we remain constructive in equities, but the strait still isn't open. So we have to see a scenario where investors wake up and realize we are in mid-May and the conflict still is not resolved.
It's all a very powerful reminder that geopolitics don't just stay on the news pages, but they impact, how it shows up in plane tickets, everyday life, inflation pressures, and investment returns. Well, thank you, Sahil. Thank you all for listening. We'll be back next week with another topic that's caught our eye.